Hey there, Investa Bros! I'm glad you're joining me. Today I'll be talking about 3M, which is a great company. I'll be looking at the company overview. We'll be discussing about its strengths, weaknesses, opportunities and threats. We're also looking at its growth prospects and competitive advantages, but most importantly, we'll be looking at some key performance indicators. Finally, we'll be performing a discounted cash flow analysis and giving you my thoughts about how to invest in the company. So if you're interested in all of this, stay with me till the very end. 3M's history goes all the way back to 1902, when it was a small mining venture. 3M was originally known as Minnesota Mining and Manufacturing. Its founders started out with a very simple goal: to harvest corrodium from a mine called Crystal Bay. Today, 3M is a large, diversified global manufacturer. It manufactures almost 60,000 products which are sold in almost 200 countries around the world. 3M came to dominate the industrial manufacturing industry through a sharp focus on the most attractive market segments. 3M is comprised of 4 separate divisions. The Safety and Industrial Division produces tapes, abrasive adhesives, and supply chain management software, as well as personal protective gear and security products. The Healthcare segment supplies medical and surgical products, as well as drug delivery systems. The Transportation and Electronics divisions produces fibers and circuits with the goal of using renewable energy sources while reducing costs. The Consumer division sells office supplies, home improvement products, protective materials, and stationery supplies. Before I start off, I like to better understand the company's strengths, weaknesses, what are its opportunities and threats. As one of the leading organizations in its industry, 3M has numerous strengths that enable it to thrive in the marketplace. These strengths not only help it to protect the market share in existing markets, but also help it in penetrating new markets. The brand value of the company, 3M, has been steadily growing for the past decade. From a brand value of $3.6 billion in 2010 to $9.4 billion in 2020, 3M's brand value is likely to continue growing. The company has a robust cash position and financially improving performance over the years. 3M's net income has been favorably increasing since 2010, except for a slight decrease back in 2019. 3M is known for innovation over the decades due to their successful research and development. Innovation has provided 3M with over 118,000 patents obtained throughout its history, with more than 4,000 new patents being issued to 3M worldwide each year. All of these help the company fend off competitive threats. The company is not very good at product demand forecasting, leading to higher rate of missed opportunities compared to its competitors. One of the reasons why the day's inventory is high compared to its competitors is that 3M is not very good at demand forecasting, and thus ends up keeping higher inventory both in-house and in-channel. This can impact long-term growth of 3M. The downside of having many patents is that the company has to spend heavily on litigation. In January 2020, 3M faced the ultimate litigation nightmare to several thousand new products liability cases per month, with over 227,000 cases in 2019. This results from an increase by a factor of nearly 45, from just over 5,000 cases in 2019. The adoption of new technology standards and government free trade agreements have provided 3M an opportunity to enter new emerging markets. The GDP of emerging markets and developing economies amounted to 35 trillion, and it is predicted to reach 53 trillion by 2026. And this can be considered as a great opportunity for 3M to enhance its market share. Stable free cash flow provides opportunities to invest in adjacent product segments. With more cash in the bank, the company can invest in new technologies as well as in new product segments. This should open a window of opportunity for 3M in other product categories. Intense competition can lead to loss of market share. Top competitors of 3M include GE, Honeywell, Avery Dennison, Corning, and Office Depot. The company also faces risks associated with conducting business outside the US. The main risks that are associated with businesses engaging in international finance include foreign exchange risks and political risks. 3M has struggled to generate growth over the past few years. Still, 3M maintains a promising long-term outlook. While the international markets are in decline at the moment, this is likely to be a short-term challenge. The long-term prospects for the emerging markets remain highly attractive due to the relatively high economic growth rates in underdeveloped regions of the world. 3M is still generating meaningful growth in healthcare and consumer products, two of its core business segments. Acquisitions are likely to add to its growth, especially in healthcare, such as the nearly $7 billion acquisition of Acelity. Healthcare is a growth industry, and the acquisition only further bolsters 3M's already strong presence in healthcare. To raise dividends for over 60 years requires multiple durable competitive advantages. For 3M, technology and intellectual property are its biggest competitive advantages. 3M has over 40 technology platforms and a team of scientists dedicated to fueling innovation. 3M continues to invest heavily in research and development. The company aims to spend 6% of annual sales on R&D. We can now see the company's recent research and development investments. 3M's R&D is so successful in creating new products that approximately 30% of annual sales come from products that didn't exist 5 years ago. 3M has established itself as an industry leader across its product segments. Their competitive advantage also helped 3M remain profitable even during recessions. Here are 3M's earnings per share during the Great Recession. The company is not immune from recessions, and its earnings per share fell in 2008 and 2009. However, it bounced back in 2010 and it remained steadily profitable throughout the recession, which allowed it to continue raising dividend. Let's check some key metrics we look at when analyzing a company. 3M's share price is $181, while its earnings per share for the trailing 12 months, ended in September 2021, was $10.19. Therefore, 3M's PE ratio for today is 17.82. This is a good sign as it is close to its one-year low of 17.37. It is also below the average S&P PE ratio, which is currently 34.25, and therefore gets a check from us. Profit margin can be defined as the percentage of revenue that the company retains as income after the deduction of expenses. 3M's net profit margin as of September 30th, 2021 is 16.9. Another check here. Revenue for the past years is slowly going up. Remember, this is a very large company. We had $30.1 billion back in 2016 and $32.2 billion in 2020. So another check for revenue growth. Let's now look at the profit growth for the last 5 years. We have $5 billion back in 2016 and $5.4 billion in 2020. So we have a healthy company that is slowly, true, but surely increasing its profits. So check number 4. Shares outstanding have been steadily in a decline in the last 5 years, with 604 million in 2016 to 577 million in 2020. We do have a slight uptick in recent months, but that is neglectable. 3M's total assets for the quarter ending September 30th, 2021 were 48.8 billion, a 6.36% increase year-over-year. 3M's total liabilities for the quarter ending September 30th, 2021 were 33.7 billion, a 0.9% increase year-over-year. So it seems that the company affords to pay out its debt. 3M's free cash flow, which is a measure of financial performance calculated as operating cash flow minus capital expenditures, has been steadily growing over the past 5 years, with 5.2 billion back in 2016 to 6.6 billion in 2020. So check number 7. Let's see if we can go 8 out of 8 with 3M. We now compare the valuation of the company to the free cash flow. The 5-year average cash flow is about 5.6 billion. Multiplying this by 20 and we get 112 billion. 3M's current market cap is 104.6 billion. Sound the horns, we have an 8 out of 8. Few companies can touch 3M's history of dividend growth. The company has increased its dividend for more than 6 decades. While recent results have been hampered by the COVID-19 pandemic, 3M offers an attractive 3.27% yield, nearly a full percentage point above the stock's 10-year average yield of 2.6. 3M's dividend payout ratio is 70%, which is elevated especially compared to the stock's 10-year average payout ratio, which is 47%. This is the likely reason for the small increase announced in the beginning of the year. Still, the current yield is rarely seen by the stock. In fact, only twice in the last 15 years has 3M averaged more than 3% yield for an entire year, 2009 and 2019. Let's jump into our Excel spreadsheet and perform the discounted cash flow analysis for 3M. As you can see, I have made some updates that I will explain later on. So for 3M, we have a free cash flow of $6,495 million. I am considering a 4% annual growth rate and a 2.5% long-term growth rate. With regards to the required returns, as you can see, I have left this value blank for now. That is because the updated version calculates the company value and intrinsic value per share for a range of required returns, simply because some may expect different returns from your investments. We have 586 million shares outstanding and a long-term debt of a little over $16 billion. So now if I were to add here 8%, the spreadsheet will calculate the intrinsic value for 6, 7, 8, 9 and 10% required returns. We can see that for an expected return of just 8%, the intrinsic value would be about $200. Higher than the current valuation of $181. However, I'm looking for a 9 to 10% return, meaning that I would be looking to buy the company somewhere between $136 and $163 per share. Considering the key performance indicator that I discussed about earlier and the current stock price, I would put the company on my watch list and wait for a better opportunity to buy. Organic growth for 3M has been difficult to come by over the past year or so, much of which is due to the COVID-19 pandemic. However, this was true before the pandemic impacted results. However, there is still a lot to like about 3M. The company spends heavily on research and development, which has allowed it to create numerous new projects and add to its results. 3M's dividend track record is nearly unmatched. The current 3.27 dividend yield is very attractive, and the company is likely to continue raising its dividend each year. There are very few companies that match the company's history of dividend growth. Remember, 3M has raised its dividend for 63 consecutive years and will likely continue to increase its dividend for many years to come. The current valuation, though not extreme, reduces the total expected returns over the next 5 years. 3M remains a strong holding for above-average dividend yield and annual dividend growth. But that said, if you want to add 3M to your portfolio, I encourage you to wait for a pullback in the share price. This way you will have a reduced cost basis and even higher dividend yield. 3M came to dominate the industry. 3M's net income has been favorably increasing since 2020. Let's look at the profit growth for the last 5 years. While recent results have been hampered by the COVID-19 pandemic, while recent results